Hello everyone and welcome to my morning report analysis videos on Tuesday 5th of March with me, Richard Perry, market analyst at Hantec Markets. There's sort of a mixed sentiment going on today. There was a bit of a reversal that we saw yesterday. Initial positivity surrounding the news flow over the weekend that apparently the US and China were close to a trade deal. That sort of dissipated, and what we saw was Treasury yields actually falling back quite sharply yesterday. And that really did hit through the equity markets. We saw a bit of spiking around on volatility on the VIX, and ultimately we saw equities in the States lower on the day, but not as far lower as they could have been. Certainly as badly as they were set up at one stage during the session. But that sort of has impacted through equity markets in the European session. They opened a bit lower. It's sort of recovered a little bit now, but there's more of a cautious sentiment going on, and that's sort of driven through the dollar moves that we've also seen, which dollar is pretty much outperforming across the board, although only a very slight amount, and that dollar strength that we've had in recent days, ever since that US GDP print last week, has continued to grow that dollar recovery again. Now that sterling has rebounded, we've had the PMI data out today for Eurozone and sterling, actually. Eurozone and the UK, and actually both have come out better than expected. The flash composite PMI was revised higher at the final reading to 51.9, so that's well above the 51.0, so an improvement there in the Eurozone flash composite PMIs. Also, Services PMI in the UK, 51.3, was actually forecast to go into contraction according to Reuters. So that's a bit of a relief there, and you've had a bit of a relief rally on sterling, only a shade, sort of about 15 or so pips higher from where it was prior to the data, but certainly helping to stabilise a little bit, and that is sort of just helped to stabilise that slip back on cable that we've seen in the last few days, although I'll go through the implications of that on the technicals in a bit. But certainly at the moment we're seeing that sterling is supported. Now we're going to look out for the US ISM non-manufacturing PMI this afternoon. That's going to be a key bit of data, and again that's expected to be higher than last month. So 57.3, so pretty strong relative outperformance there from the US economy, seemingly set to continue. So that takes me to my chart of the day, which is sterling yen. Now this is an interesting one because in the last few days we've seen this run higher on sterling. Last couple of weeks actually, I should say, but that run higher on sterling started to roll over, and a little bit of a concern that we could be setting in for a bit of a corrective move. Now we've seen this uptrend recovery being breached, following on from yesterday's move lower. A little bit of a rebound today, so it makes it a little bit more of a mixed outlook. But if today's move isn't held and this rebound is sort of sold into again, with the resistance in the last few days starting to build up around that 148.5 level, then we could start to see that the sterling rally rolling over. Now we've seen sterling rally rolling over already against cable and also the euro. Will it be a chance to buy is the question, because obviously Brexit is still a big factor here for sterling. But the technicals on sterling yen remain positive, but could be looking to a bit of a corrective move. They're positive on a medium-term basis following on from this recovery in the last couple of months, but is this a move that's going to be just seeing the gains paired, pull back towards that breakout level coming in around 144.85 as a basis of underlying demand, where you see the old resistance turning into new support, so you could see an unwinding move back towards there. Let's look at the hourly chart. Again, rolling over to an extent. You've got the momentum indicators. Hourly indicators are less positive than they have been, although that RSI picking up from 30 is not dissimilar to what we saw on the 22nd. Now let's see how this RSI reacts to 60 on the hourly. I think that would be key. MACD lines, how they react around neutral. If that is a point at which they start to roll over, then we could see the pressure turning into a more of a corrective move. You've got the support initially at 147 figure to watch. If that breaks to the downside, that will complete a top pattern now as well and imply around 150 pips of correction. So something to think about on sterling yen. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.